Everyone is talking about AI chips. Everyone is talking about data centers. Everyone is talking about power demand. But almost nobody is talking about the one resource all of them depend on: water. What if I told you that AI literally runs on water? What if I told you SpaceX is building new water infrastructure right now to support Starbase in Texas? And what if I told you that 5 low-cost stocks are sitting right in the middle of both trends? Most investors have no idea. I'm Tony. This is Tony Crypto and Stock News. Quick note before we dive in. Nothing in this video is financial advice. Always do your own research. We're here to break down the data so you can make your own informed decisions. The thesis. Everyone knows the AI trade. Chips, power, data centers, hyperscalers. You've heard it 1,000 times. But here's what they're not telling you. AI has a water problem. A study published in early 2026 by researchers at UC Riverside and Caltech estimated that if current water use intensity holds, U.S. data centers could need between 697 million and 1.45 billion gallons of water per day in new capacity by 2030. The value of the infrastructure required to deliver that? Between $10 billion and $58 billion. That number is not a typo. The U.S. Department of Energy said data center load growth has tripled over the last decade and could double or triple again by 2028. Every single one of those facilities needs water to cool the chips inside. Air conditioning alone doesn't cut it anymore. We're talking full liquid cooling systems, And those systems need clean, treated, managed water flowing in and out constantly. And then there's Wall Street confirming it. In March 2026, Ecolab, and a $77 billion water treatment giant, paid 29 times forward earnings before interest, taxes, depreciation, and amortization for Coolit Systems, a liquid cooling company most people had never heard of. 29 times. In cash. That is not what you pay for a boring industrial company. That is what you pay when you believe a category is about to explode. The smart money is calling water the next AI trade. Today, we're looking at 5 ways to get there before the headlines catch up. Think about the evolution of the AI trade. First, it was chips, then it was power, then it was hyperscalers. The next leg may be water. And the market is only beginning to figure that out. SpaceX plus water and the story nobody is covering. Now here's the angle almost nobody in finance is connecting. SpaceX. Starbase, Texas, SpaceX's launch city, is building a brand new water pipeline stretching from Brownsville all the way to the launch site. This line will replace the truck-hauled water deliveries SpaceX has been using to supply its employees and operations. The Brownsville Public Utilities Board confirmed the contract with SpaceX and classified the company as a non-residential customer. SpaceX is funding the construction of the pipeline extension itself. Why does this matter for investors? Because as SpaceX scales launch cadence, and it is scaling fast, the water infrastructure required to support that operation scales with it. Valves, metering, flow control, pressure management, leak detection. All of that is exactly what our first stock pick does for a living. SpaceX is building a city around a rocket program, and that city needs water infrastructure the same way any city does. The companies that provide that infrastructure are quietly getting paid. SpaceX isn't just building a rocket company anymore, it's building a city. And cities need water, they need pipelines, they need valves, they need metering, they need pressure management, they need infrastructure. Pick one. MWA, Mueller Water Products. Ticker MWA. Price around $25 to $26 per share as of time of recording. This is the most direct, lowest-cost individual water infrastructure stock in the space right now. Mueller makes the physical backbone of water systems: valves, fire hydrants, pipe repair products, pressure management tools, metering, and leak detection. But the piece that makes this an AI and SpaceX play is their software platform called Centrix Water Intelligence. This platform gives utilities real-time data on pressure, flow, leaks, water chemistry, and pipe conditions. In their most recent earnings, Mueller reported net sales up 5.5% to $384.4 million, beat analyst estimates, and raised full-year 2026 guidance. Analyst price targets now range from $32 to $35, meaning some on Wall Street see 25 to 40% upside from current levels at time of recording. AI connection. As data centers pull massive new water demand from municipal systems, Utilities need Mueller's smart leak detection to free up capacity without building entirely new pipelines. SpaceX connection. The Brownsville to Starbase pipeline uses exactly the type of metering, valve, and pressure management infrastructure Mueller specializes in. This one is undervalued, undercovered, and directly in the path of two of the biggest infrastructure buildouts happening right now. Every gallon saved is capacity created. That's why smart leak detection is becoming more valuable every year. Pick 2. T-Tech, Tetra Tech, ticker TTEK. Price in the $30 to $50 range at time of recording. This is the one that almost nobody in financial media is connecting to the water infrastructure theme. Tetra Tech is an engineering and consulting firm. They design, build, and operate water systems, the actual systems, for governments, defense, aerospace, and industrial clients. Their backlog as of Q2 2026 was $4.28 billion, growing 8% in a single quarter. They raised full-year 2026 revenue guidance to between $4.25 and $4.4 billion. Their digital platform, WaterNet, brings AI-driven analytics to water system management. Analysts have a buy rating on the stock with price targets as high as $48. AI connection. Data center campuses need engineered water management systems from the ground up. That is Tetra Tech's core business. SpaceX connection. Tetra Tech does water systems engineering for aerospace and defense installations. As Starbase scales toward a full launch city, that's exactly the kind of complex infrastructure engineering they get called in for. Pick 3. VLTO, Veralto Corporation. Ticker VLTO. Price around $91 at time of recording. Veralto was spun off from Danaher in 2023, and most retail investors still haven't found it. Veralto is a pure-play water quality and treatment company. Their water quality segment includes brands like Hotch, Trojan Technologies, and ChemTreat, companies that measure, analyze, and treat water for industrial, municipal, and commercial customers worldwide. Their most recent quarterly results showed sales up 6.7% year-over-year to $1.422 billion, adjusted operating margins of 25.1%, and free cash flow of $170 million. They also completed strategic acquisitions worth approximately $620 million and repurchased $300 million of their own stock year to date. Here is why VLTO is the AI water play most people miss. Every hyperscale data center being built for 2026 through 2028 is using liquid cooling by default. The water going into and coming out of those cooling systems must meet strict environmental compliance standards. Veralto's water quality monitoring and chemical treatment technology is what certifies that water meets those standards. As regulatory pressure grows and water use at data centers becomes a public scrutiny issue, Veralto's services go from nice to have to mandatory. Think of Veralto as quality control for the AI economy. Every drop going into a cooling system needs to be monitored, measured, and managed. That's where Veralto lives. Pick 4. WTS. Watts Water Technologies. Ticker WTS. Price around $300 per share at time of recording. But here's the important note for viewers on SoFi or other fractional share platforms. You do not need $300 to get in. You can buy a fractional share for as little as $25 and still capture the upside. Watts Water surged nearly 5% after hours in April 2026, after industry reports specifically identified data center cooling as a critical bottleneck for AI expansion, and named Watts as a key beneficiary. The company has guided for 8 to 12% sales growth in 2026, with operating margins of 18.8 to 19.4%. Watts recently completed acquisitions of Haws Corporation, Superior Boiler, and Saudi Cast, expanding their commercial and industrial water management footprint significantly. Their smart and connected water solutions are exactly what building engineers and data center operators need to manage high-density liquid cooling systems at scale. This is a premium name in the water space, priced accordingly, but the growth thesis and the AI data center catalyst make it worth the fractional share approach. Pick 5. PIO. Invesco Global Water ETF. Ticker PIO. Price around $46 to $47 at time of recording. This is the easiest entry point for viewers who want exposure to the entire water infrastructure theme in a single ticker. PIO holds a diversified basket of global water companies, including Xylem, Veralto, Watts Water, and other names we've already covered today. One purchase. Instant exposure to the entire water infrastructure theme. Now, here's the bundle strategy I want to talk about. And this is specifically for folks using SoFi Active Investing. SoFi lets you buy fractional shares with zero commission. That means you can build a self-constructed water basket, MWA, T-Tech, VLTO, PIO, and even fractional WTS for under $200 total. You don't have to pick just one. You can build the whole theme. Here's how I think about it. Use PIO as your core position, your stable, diversified base. Then layer MWA and T-Tech as your higher upside individual picks. Add fractional shares of VLTO and WTS to round out the basket. You've now built a water infrastructure portfolio that touches AI, SpaceX, municipal infrastructure, and global water scarcity. All for a starting investment that's accessible to any retail investor. SoFi link is in the description. Open an active investing account with $25 and get $25 in stock to start building. The new AI bottleneck. First it was chips, then it was power. Now it may be water. And that's exactly why investors are starting to pay attention. Here's the thing that most financial channels are completely sleeping on. The public is now fighting back. In June 2026, Reuters reported that concerns over AI-driven data center expansion now include not just electricity demand, but water use and local environmental strain. Microsoft, which is building $20 billion worth of data centers near the Great Lakes, is facing growing scrutiny over exactly how much water those facilities will consume. That public pressure is a tailwind for the companies we just covered. Why? Because when regulators and communities push back on water consumption, data center operators have to prove they are managing water responsibly. That means contracts with companies like Mueller for smart leak detection, Veralto for water quality monitoring, and Watts Water for efficiency systems. The backlash against AI water use is ironically driving more money into water infrastructure companies. Now let's be fair, every investment thesis has risks. The bear case, be honest with yourself. I always give you both sides. Here's the honest bear case on this theme. First, these stocks are not crypto. They are not going to 3x in 90 days. This is a multi-year infrastructure build-out thesis. Patience is required. Second, interest rates matter for infrastructure companies. If borrowing costs stay elevated, municipal water projects can get delayed. That affects the order books of companies like Mueller and Tetra Tech. Third, AI companies are actively working to reduce their water footprint through chip efficiency improvements. If cooling technology advances faster than expected, the water demand growth could be lower than current projections. The bull case is a $10 billion to $58 billion infrastructure build-out over the next 5 years. The bear case is slower than expected data center growth and improved cooling efficiency. You assess which scenario you believe in and size your position accordingly. And before we close, one more time, none of this is financial advice. Every number in this video is at time of recording. Markets move. Do your own research. We are here to help you understand the data, not to tell you what to do with your money. The market rewards people who see trends early, not after Wall Street upgrades them, not after CNBC starts talking about them. Early. Before the links and the sign-off, I always close with a word. Proverbs 3 verse 13 says, "Happy is the person who finds wisdom and the person who gains understanding." In a market full of noise, wisdom is the edge. Understanding what others miss. That's how generational wealth is built. Stay curious, stay disciplined, stay grounded. If you are ready to start building your water infrastructure basket, SoFi Active Investing is where I'd start. Open an account with $25 and get $25 in stock. Link is in the description. And if you're in crypto, or if you want to get in, Kraken is where I go. Trusted exchange, solid security, easy to navigate. Kraken link is also in the description. And one question before you go, what is one investment theme Wall Street hasn't fully discovered yet? Let me know in the comments. I read every one of them. See you on the next one. God bless you.